Welcome to this special coverage on Bloomberg Quint Q1 with BQ. We are talking about Maruti Suzuki's first quarter earnings, which seems to be largely in line with the street expectations. If you look at the revenues, they were down nearly 12% on a year-on-year basis. This is largely to do with the fact that they had seen an 18% decline in the overall volumes during the quarter. EBITDA again coming in slightly better than the street expectations at 2,049 crores. Of course, that is a decline of 40% on a year-on-year basis because of the negative operating leverage as well as lower volumes. We are looking at the overall margin picture, which is weak on a year-on-year basis. However, it's in line with the street expectation. Joining us right now live is Ankit Merchant. Ankit, if you could just give us an idea as to what do you make of the numbers on the initial take. Were that in line with your expectations at this point in time?
Yeah, pretty much in line. However, we were expecting the operational performance to be a little bit better. But given the current scenario, I think 10.5% it's a good number to post. We were anyway working around with an EBITDA margin of near about 11%. So this is pretty much in those particular line. Another interesting point has been the realization that has grown by actually 4.5%. So in a very difficult scenario where the volumes have declined by close to 18%, and where the realization has increased by 4.5% is a really good indicator that they still are being able to derive certain price and have not actually given away few discounts or something. However, another point is basically their COGS that has gone up slightly year-over-year. That has also led to this particular decline. Other costs has also gone up by near about 1%, and the employee cost has taken some bit of increase. So that's a really the point where employee cost has gone up substantially by 100 basis points. So that's a little worry point.
Okay.
So we'll get to know about from the management why the employee cost has taken such a drastic increase as such.
Ankit, I was also going through the presentation and the footnotes. There was no mention about the impact of the Indian accounting standard change. A lot of companies are reclassifying leases and rentals, on the depreciation front and on the finance cost front. So do you think there was any impact of Ind AS because of which there is some adjustment to the EBITDA, or it's still not clear whether or not there is any impact in the first place?
I think it's not clear yet were there any impact of the new Ind AS.
Okay.
But I think we'll get some clarity over the con call, which is scheduled at 3. So.
Okay. Ankit, apart from, the earnings, of course, they are in line with expectation, probably a non-event now. The earnings are behind us. Moving forward, given the fact that we have seen a healthy 30% correction, most of the auto stocks are at a 3-year low, including Maruti, which is at a multi-year low. How do you basically, trade Maruti from here on? What is your advice to your client? Would the rating remain similar at, these levels for most of the analysts, including you? Or from here on, do you think the valuations have turned attractive for a company like Maruti, which has corrected significantly from the peaks?
So, we were just analyzing one data point yesterday, and the FII holding in this particular stock on the last quarter has actually gone up by a few basis points.
Okay.
So, only the DII holding has actually come down a bit. Insurance holding is similar. And the other domestic institution comprising, I guess, of insurance also have taken this particular stock.
Okay.
So, it's a very, at this particular levels, one can't go really, a sell on Maruti.
Okay.
Yes, there have been a lot of issues related to, where the volume will come from, or will there be any particular, hindrances where the company, how will the company perform. But over the past, if we look at since over the last 10 years, whenever Maruti as a stock has corrected by near about 25 to 30%, in the immediate next year, the stock has actually given very good returns. So Maruti has been able to bounce back from those particular issues, and it has come out very stronger. And that was reflected, once when we had this particular strike at Manesar. And from there on, Maruti just went on to become one of the, the multi-bagger stocks in this, in the large OEM space. So I think it's a very interesting buy for me at this particular level.
Okay.
We have been suggesting it to our clients also. And for a long-term investor, what else do you need where a good company is available at a, at a price where where everyone on the street is a pessimist? you can basically bet on this particular companies to have a good return over a period of time.
Okay, Ankit, we leave it at that, and thank you so much for speaking to Bloomberg Quint on the quarterly earnings of Maruti. So, broadly in line with street expectations, let's see what the management really has to talk about in the conference call with respect to demand, because demand clearly has slowed. Of course, there were hopes that post-August we could see some improvement in demand, and whether or not management still believe that could happen, because a lot of banks have been talking about problems in the auto financing space where the demand has slowed down. Will that be at an inflection point ahead of the festive season? So these are the few things to watch out for ahead of the management conference call at 3 p.m. Let's see what the management has to say. Till then, it's a wrap on this special coverage on Maruti Suzuki Q1 with PQ. Thank you so much.